Okay, so what is support? What's resistance? What does consolidation mean? I heard people talking about this stuff in the chat bits on eToro, and they'd say, you know, there's it's got support at 220, or it's got resistance at 350, and I think, what are they talking about? I have no idea what they're talking about. Just, you know, sort of no, yeah, all right, go along, you know, read the other comments. But it made quite a big difference, really. When I was talking about that stuff where I used to do too much leverage and then it would start dropping and I'd sell, then it would start going up and I wouldn't know why. And so this stuff about support and resistance kind of helped a bit with understanding what was going on there. And channels, things called trading channels and trend lines. And this is mostly about charts and technical analysis. Really great traders, obviously, they do fundamental analysis. They understand what they're trading in, a bit about the company or the stock or the asset, or, you know, what improvements are going to happen. They know stuff about the actual product itself, and they use technical analysis to know sort of, let's say they think, yeah, it's going to go up. They're pretty sure it's going to go up in value or down in value, but they use technical analysis, charts, to look at when to actually come into a trade to maximize their profits. Now, some really big traders say, yeah, I don't care that much, because if I miss out on a small bit because I came at the wrong time, I don't care, because overall it's going up or overall it's going down. But it's been really helpful to me. It's nice to understand what they're talking about in these conversations. So I'll show you. So if I go to, let's say I go to Ethereum. So I've been looking at that a lot. So Ethereum, and I go to the charts, normal chart page, and we're used to seeing this. We're used to seeing a bunch, or I am, I might change the background to black. All the better traders seem to use that, so I might just copy them. But you see these normal charts, the lines, they go up and down, all the rest of it. So let's say I put it in a, here we are, daily. So this is the daily view. Each chart, each candlestick represents a day. Green ones, obviously it's gone up in that day. The red ones, it's obviously gone down in that day. Where this bit, the wick, the bit without the color on it, that represents the lowest point it hit that day, and that represents the highest point it hit that day. But that's where trading opened, and that's where trading closed. So again, that on the red one, the top is where trading opened, and the bottom is where trading closed. Green one, bottom is where it opened for the day, and top is where it closed for that day. So if I zoom, oh, it's doing this. Why is it doing this? All right, let's say I go to here. All right, see how the stock was sort of going up here. So we start, this is a long time ago. This is, you know, I can't zoom out because something's happened to my mouse and my trackpad. But let's say this stock, right? So it started really low, it's at 1250. This is right at the beginning. Then it shoots up. Okay, so you see the stock shooting up. And then it stops there. Okay, it stops about here. Something says, no, don't go further than that. And then here, this is called consolidation. All right, it means that the price isn't going up a lot. Each one of these represents a day, so there isn't a lot of swing. It's basically, it's stayed at a level, then it's started to consolidate here. It's gone up a bit. Consolidated mean it's found some sort of good level where people think, all right, it's safe. It's not going to suddenly go back down. It shot up again. It's hit resistance here. Resistance would be the thing which stops it going up more. Let's say I'm going to talk as if you're buying a stock, okay? If you're selling it, it goes the other way around. So, but if you're buying a stock, resistance is the point where something stops the price from going up a bit more. So, boom, it hits resistance. The resistance is actually here. This is where people said, all right, no, we can't go above that. It drops a little bit. It hits support here. Support is the point at which people say, no, it's gone long enough, it's gone down enough now, we want to go up again, that's it, we're not going to... So look, if you look at this line, you see the line I'm drawing, you see how it matches, it hits this one here, boom, but it also hits the bottom of this one and this one. Do you see that? You see that? So that's called a support level. So a support level, the thing is, if you look at a bigger section of this stock, you'll see support levels in different places and resistance in different places all over the charts. So they went boom, it started going up again here, so we're going up, and then it hit some sort of resistance here. See, look, again, it's at the top of this candle here, matches up with the same place where people thought, oh no, it's going to go down, it won't go above this. A lot of this is just psychology of masses of people. big groups of people get together, and if you get a big group of people in some square, some town square, and someone at the other side shouts, "Monster!" and someone starts running, then another guy starts running, then everyone starts running because someone shouted monster. There may be no monster, but someone shouted one, so take the same analogy. The crowd's running and you hear another guy, there's a big sort of building and there's a bunch of people in the door going, "It's safe over here, it's safe, come in." The crowd goes, "All right." If lots of people start running towards them, most likely most people will end up running to that safety because we work as a crowd, we're kind of crowd animals. And a lot of it's kind of the same here. So look, they thought, no, it's not going to go above there, sold again, and it dropped down, and they remembered that down here, there was a support level. So they thought, well, I don't think it will drop below that again, and it didn't. Look, so it hit that same level, and the crowd said, no, that should be it, and off they went. So they moved a little further. So then it bounced off that support, so people now think, once it's hit the support twice, they think, all right, it's safe, starts going up again. Let's see, so on this day, it stopped around about this same support level, this same resistance level, but then it broke out. Okay, so what you have is you have support is the base. Boom, well, I don't think it's going to go lower than that. Resistance would be the upper one. Yeah, I don't think it's going to go higher than this. Consolidation would be where it's been doing let's say a stock has been doing massive things. It's been, let's go for a 4-hourly thing. Okay, so like there's places at which, you know, the stock here has just been going up. It's gone from 222 and it's going up and up and up and up and up, and it's got all the way up to here, 310. That was recently. So people go, oh my God, what? There's huge fluctuation in price. This has been going up for like a week or 2 weeks or whatever. It's just a week. It's been going up and up and up and up. At some point that stops. Everyone goes, oh my God, is it going to go down? So it goes down quite a bit, down here to 285, and it hits support there. Then it goes up and it's at 308, and then it goes down and it's 292. You see how that swing is getting narrower. So it stopped here, down to there. It went up, but a little lower than before. It went down, but a little lower than before. This is where the price is starting to consolidate, okay? So it's starting to reach a point where people think, all right, hold on a minute. There's a consolidation between this range, okay? Now, a range is the area of trading between support and resistance. Because sometimes you think, you know, stocks are just randomly going up and down. Sometimes, let's say here, the support is, let's say it's between 290 and 310. It might just stay there, going 290, go up again, 310, no, go down again, 290, no, go up. It may just do that for a few days. It's a trading channel. It trades in a range between a bottom and a top, a support and a resistance. Now, usually when it breaks out of that channel, people can draw lines. Sometimes you see these charts and they draw lines. They'll get a chart like that and they'll draw a line along the bottom, a line along the top, and it'll be sort of bouncing between it. Or you'll notice when people are, now the channel that they draw, this is called the trend lines. They draw 2 trend lines. Sometimes that channel can be going up. So it's going up, but you can sort of draw 2 lines. One beneath all the bottom points and one on all the top points. And you can see that it's going up, but it's sort of going ging, 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 ging in a channel. And people can buy and sell within that channel. I tried it with too much leverage, lost a lot of money. So I don't really try that so much anymore. I just look at the overall trend for now, till I know more. It can also be a downwards channel. So it's dropping, but it's dropping like this. Or a sideways one, you know. Now, often when it breaks out of that channel, that's what people are looking for. They're waiting for a breakout. You'll hear that one as well. So they're waiting till it goes either above the top line, the resistance line, or beneath the bottom line, the support line. Usually when it does that, it sort of accelerates in whichever direction it's going. Sometimes that can fool you though. So sometimes it looks like it's breaking out, people buy, oh my God, it's broken out, and it doesn't, it just goes down again, and everyone goes, ah! At the moment my screen for some reason won't let me actually zoom out and zoom in, so I can't show you this sort of more accurately. But that's really what resistance and support are. If you look at shorter charts, it becomes much more evident. So if you put it on a 30-minute chart and you start to look at where it keeps going up to and where it keeps going down to, you'll notice support lines like there's a support line. So you see how here it hits, boom, 279. So later on, that same one is used again. You see, it becomes a level where people are watching, I don't know, and here, look. So it becomes a level where people think, okay, it might have some sort of change in direction where it hits that point. If you look over the charts, if I could zoom out properly, I could show you, but I can't. If you look at the charts, let's go to something else, see if it works. I'll go to Tesla. I like Tesla. And no, it's just not letting me do it. But you'll be able to see these all over the place. Here's one, look on Tesla. So you see this line here, how the line, I get this line by pressing here, by the way. You'll see that line hitting on this one, this one, this one, and this one. So there is a support line, 363.57, and it's hitting on this one here. You see it? So right there, you can start to see where that number for some reason becomes significant. So on this one, it was resistance. On this one, it becomes support. But they become significant. You can draw these lines and see areas of support and resistance across these charts. It helps to make a little more sense of what's going on, really, when you look at it. That's it. That's a little bit about support, resistance, and consolidation. So consolidation is where it's forming a level at a certain line, so that in future, if you go up a lot and you spike up, and then there's a big crash, people look for areas of consolidation where the price generally traded at a similar level for a long time, because those areas of consolidation, then they provide strong support, because there's so many lines matching up along there. Frequently people will see that as a safe level. So if it's falling, areas of consolidation in the past now act as supports. You see? That's it for now.